All right, what is up, traders? What's up, tycoons? Super excited for today's video. Day trading is not as easy as you think it can be, right? And I'm sorry to tell you guys that it's not impossible, but it's a lot more difficult. Now, even though I had about 4 or 5 successful day trades today, it was a lot more difficult than I thought it would be, and I didn't even make as much money as I thought I would. And you just have to live with that, okay? Some days it's really easy and you feel like you don't even have to do much. You place a trade and it just continues going your way the entire time. Sometimes, you enter a trade and it hits a take profit level, right? Your initial take profit level when you go into a trade with a game plan, you don't sell there, and then it completely reverses against you. And today's going to be a really good example of doing everything right and it still being a struggle, still being a process. Okay. So be sure to smash the like button, subscribe to the channel. We're going to go over a few different strategies, that I use to day trade, right? There's not really just one simple thing that you can always use. Remember, trading is really like going to battle. It's like going to war. So you want to have as many weapons at your disposal, AKA strategies. And then you want to have, the proper knowledge and, use, all right, of those weapons. Okay. There's no point in owning an AK-47 if you don't know how to fire it, right? Or maintain it. So that's what we're going to go over in today's video. And I think it's going to be really good for you guys, eye-opening, especially a lot of the people in the Discord. I posted many of these updates intraday in the Discord, and we're just going to break down, what it is that I'm looking at, how I'm doing my trades, why I'm doing my trades, and the whole thought process behind it. All right. Now we're looking at the SPY right here. Okay. The SPY ETF, SPY, SPX. Those are pretty much, just the S&P 500 is like the main thing that I trade on a daily basis. Okay. Sometimes it's QQQ, maybe once in a while it's IWM. But for the most part, I'm looking to day trade the S&P 500, whether it's via futures now, options or whatever. And so, today I did a combination of both. I did options strategies, I did futures trades, and we're going to review all of those. And I think you'll enjoy it. Now, one thing I do want to mention is that I pay close attention to the dollar, okay, the Dixie. Now, I've dropped videos before, and you guys have seen some of my market update videos. The dollar is very important to the stock market, and a strong dollar is generally weak for the stock market, and a strong dollar is generally, and a weak dollar is generally good for the stock market. So we'll go over how I'm using both of those together to really give me confidence in my strategies and, my plays. And I think it's going to be a really good video. Now, all of these little ovals here are different entries that I traded. So the first thing that I want to go over is that, when the market opens, I'm waiting for the opening range to establish. I'm not looking to execute trades until the opening range is established, right? And so if we zoom in here, what we're going to see is that there's a green dash line and a red dash line right here. This is the opening range. All right. And what do we mean by that? Well, we mean that, when the market opens, it's usually going to establish a range, right, of highs and lows. And traders, right, I didn't invent the strategy, but traders love to trade the opening range strategy. Okay. Now, I actually have custom scripts and indicators that do the opening range strategy for you guys. Okay. And you can get those via the link in the description. All right. All of the Discord members get access to that. But, if you don't want to join the Discord, you can actually just, purchase the opening range strategy for Thinkorswim, and it will do the hard work for you when it comes to charting. Now, the green dash line is your opening range high. The red dash line is your opening range low. And so this morning, I saw the market internals, which the market internals are going to be one of the biggest edges that you can gain as a novice retail trader. If you're not familiar with market internals, I've done several tutorial videos on them. They are truly something that will help give you an edge. It's Wall Street's best kept secret, and I'm trying to bring it out to you guys. Now, this is the daily price action for the market internals, and what we see is the VOLD. This is your volume up down is down. It's below zero. It's bearish, and the first 3 candlesticks here are red. We see the add. This is your advanced decline, so the number of stocks advancing versus declining. It opened up below zero, actually in bearish territory. Okay. Negative 1500 is going to be bearish territory for me. But what do we see? The 1, 2, 3, the first 3 candlesticks here are actually green, right? And then we look at tick. Tick also opened up in extreme bearish territory, and the 1, 2, 3, first 3 candlesticks are green. So using the opening range strategy, I'm seeing, hey, none of the candlesticks here are closing below the opening range low. So this tells me that there's buyers there in the opening range low, and that more stocks are advancing than declining after the open, and more stocks are upticking than downticking after the open. I just know that, hey, I may want to be cautious because, when it comes to volume up down, that's continuing to trend down. So what I did was I entered a long position in call options here once we were back at the opening range low, and looking to see if candles were going to close below the opening range low and head lower, then I would exit my long position via call options. Right now, being that the market internals opened up in bearish territory, the vol was continuing to go down, and the tick opened up in bearish territory, I did not want to overstay my welcome. So I was simply targeting the VWAP, which is the purple line right here. So entered long, hit VWAP, sold. Okay, now as you can see, it actually went much higher and broke above the opening range high. Typically, when I'm looking to do this trade and hit opening range lows, I'm looking to target the opening range high, but it was a difficult day. I didn't like how the internals looked. They looked bearish, and there were warning signs. And there's been many times where I've ignored those warning signs there and lost tons of money, right? So, I'm sticking to my rules, saying, hey, I'm not too confident in this trade. I'm going to take quick profits at the VWAP. Now, as I mentioned, you can see we went above. Now, once we went above, similarly how we had a look below and fail, aka a false breakdown below the opening range low, now I'm looking for a false breakout of the opening range high, because yet again, what do we see? We see bearish internals on the vol. The ad opened up in bearish territory, and then what do we see? It starts pulling back here, right? The tick opened up in bearish territory. We only had one candlestick close above within the first hour of the market trading, close above zero. So that's not bullish either. So knowing all of this, having these context clues, I'm saying to myself, hey, I'm going to open a short position here via put options, and I'm going to look to target VWAP again, because I know that the internals are trying to turn around. I'm not super confident in the short position, but when it comes to having a strategy and, having a system, I'm following my system, right? And so by doing that, I was able to, get a nice little trade here, get a nice little trade here. I closed again at VWAP, and you can see this time it actually played out. Okay, this time it actually worked. Too many times people go into a trade, don't follow their rules. And what do I mean by that? Well, my rule was, hey, I'm looking for the look below and fail and just going to sell at VWAP, right? I'm looking for a quick scalp, and I'm not going to overstay my welcome because things can turn around anytime given the state of internals. And here I said the same thing. And you can see I closed at the VWAP here, and look what happens. We actually rallied back above the opening range highs. So I missed this initial rally, and if I would have held the initial long position here and closed perfectly at the top, that would have been a very, very over 100% gains that I could have captured trading those call options on the SPY ETF. But I'm not a perfect trader, and nobody will be. It's really just about having a system. And that's what was so frustrating today, was that, looking back within the first, couple hours of the market being open, I said, wow, I really could have been up over 100% on my long position if I would have just held and not been so worried about market internals. But I have a system, and I'm going to stick to it. And this system really actually saved me, okay? Because once we got up here, I said, hey, there's this rising wedge forming. And I'm posting in the Discord too as well. I said, hey, closing the shorts here, this could be an ugly inverse head and shoulders, right? With the left shoulder right over here, okay? And then the head, and then the right shoulder here. And I said, I don't know what's going to happen here, but it's either a rising wedge or an inverse head and shoulders. And once we came up here, we hit the target for the inverse head and shoulders. I come back, I check internals, and I say internals still don't look good. If the advanced decline stocks, right? So the more number of stocks advancing versus declining, if this would have continued up the whole time rather than tapering off, going sideways and starting to make lower highs, I would have been more bullish, and I would have been afraid to enter put options up here in short positions in S&P 500 futures. But being that I'm looking at the internals, I'm seeing now a chart pattern forming after the inverse head and shoulder targets being hit, right? And targeting right here, targeting 472.78 on the S&P 500 SPY ETF. You can see we really only wicked above there barely by a couple cents. I said, you know what? I feel good about a short position. So I entered into the short position. Okay, showing this to people in the Discord. And what do we see? We see the clouds go red. Okay, so the clouds go red make me feel good about my short positions now. Now, the clouds are just something that I like to use to really gauge momentum, gauge market direction, and they also can act as support and resistance. You can see when the clouds go red here, we come back up to the inside of the cloud, and then we reject again and continue heading lower, where to the opening range low. Now, I didn't take this opening range low long here, even though a few people I know did, and that was a very, very good trade from the opening range low to the opening range high. What I did was I actually posted in the Discord, hey, this is actually going to form an inverse cup and handle. So once the clouds turned red, I took some profit and eventually got stopped out with a trailing stop loss in profit on the short position here. And then I said, all right, well, now we have a cup. And if we bounce up here, this is going to form a handle if we reject. So what do? We come up to the opening range highs, right? If we take a look at our futures contracts right here, and take a look at the S&P 500 futures, we can see that, here was the inverse cup, and then we come up and we reject right around the VWAP on the futures, right around the Fibonacci resistance level, and we were looking for the breakdown of this level right here, 47.59, and that was going to be the put scalp opposition, the short futures contracts, position trade right there, and that trade worked out beautifully. So I actually got in up here, rode that wave down. And then once we did, and once we broke below and we had this strong candlestick down here, now I'm seeing bullish divergence, right? And what's bullish divergence, you may say? So we have a low here, okay? So you see how, we're trading at lows, right? Over here, there's a low. The RSI is extremely low right here. Well, here we make lower lows, right? And the RSI is basically making an equal low / slightly higher low. So, price went down a lot. Okay, we went from basically 471.8 all the way down to about 470. Okay, we broke through 470. And we created lower lows without creating lower lows on the RSI. Now, this is a form of bullish divergence, and that's an indicator to me that, hey, we could actually get a rally. Now, I initially spotted the bullish divergence over here once we first got into oversold territory, and that's where I got my long position. Okay, but I grabbed the starter position because I wasn't too confident after the inverse cup and handle forming, right, with the cup right here, then the handle right here, and knowing that I just had a very successful short trade. I'm not too confident in the bulls, but I want to get a little bit of skin in the game. And we drop a little bit further, and now we're back in that oversold territory. We're really oversold on these small time frames here, and I see my favorite chart pattern forming, known as the inverse bump and run, which is where you have a prevailing downtrend as indicated by this trend line, and then you have the bump down. So you have a prevailing trend, and then you have an aggressive bump in the price. And I knew that if we could break this trend line right here and get a strong candle, that we could potentially get the inverse bump and run to play out and send SPY back up another dollar or two. So I talked about using the Dixie, right? And so now let's go ahead and use the Dixie. Okay, so we're going to come over here and zoom in on the Dixie real quick. This is your dollar index. So if you look right here, this is about 1 o'clock in the day. All right, roughly 1 o'clock in the day. And you can see also here that we broke through this initial uptrend that we had. And so that was a good sign for the longs, right? Continuing to go higher. And what did we see? Well, we actually ended up seeing a falling wedge forming here on these candlesticks. And I said, hey, if the Dixie breaks out of this falling wedge, that's going to be bearish for stocks typically. That's going to be bearish for the S&P 500. And so I could take a short position. So that's exactly what I did. Right over here is around 1 p.m. Right over here, this is exactly 1 p.m. Okay, this candlestick right here is exactly 1 p.m. So, using Dixie as a metric to really help give confidence and give an edge in the market, seeing that, hey, we have an inverse cup and then an inverse handle potentially forming, right? Seeing that we have a falling wedge, which is bullish on the Dixie, I'm saying, hey, I'm looking to take profit on these short positions. And sure enough, those short positions or enter short positions. Sure enough, those short positions worked out very, very well. But what I noticed was that the Dixie did not break above resistance, right? If we go down to a 5-minute time frame, which is the time frame that I was looking at this chart pattern on at the time of the day, we can see that we broke out, and then each 5-minute candlestick was closing here at resistance and not able to break above. So that's what made me also kind of initially get this starter position in the longs on top of the bullish divergence, saying that, hey, the Dixie is rejecting resistance, potentially go down. And this could be yet again a look above and fail, right? Where we looked above and had a false breakout here on the Dixie. All right. So, we had a false breakout here on the Dixie, and then we came back down within range. And so I'm thinking about all these possible future scenarios before they happen, right? We're thinking about the possible rising wedge here before it happens. We're thinking about the inverse bump and run before it happens. We're thinking about the inverse cup and handle before it happens. We're thinking about an opening range low, look below and fail. We're thinking about an opening range high, look above and fail. We're thinking about all of these things before they happen, and then we're letting price action tell the story, right? So it's kind of like we're trying to guess a movie or guess an ending to the movie. And if we're seeing all of these things, it's kind of like having clues. It's kind of like someone telling you, like, oh, well, it's almost like giving a spoiler in a sense, right? Well, like, hey, just so you know, this guy, the evil villain, he's got this secret weakness, okay? And if you use this secret weakness on him, he's going to be destroyed, okay? And so now you're coming into the market and you're having that clue about the evil villain, okay? The evil villains are the market makers. They're Wall Street. They're against you, okay? They're looking to profit off of your unsuccessful trades. And so what do? Well, we say, hey, I'm seeing the weakness. If I can use this weakness, I can beat the evil villain. And, essentially that's what happened today. And, it was much more difficult than I wanted it to be. But at the end of the day, it was about 4 or 5 successful green trades. Rather than panic selling this one for a loss when we dropped lower, I used my edge. I used the weakness that I saw in other areas of the market to double down on the position and was able to get some nice profits using the opening range strategy, using the clouds, using chart patterns, and using market internals as well as the Dixie. So, there's lots of things you have to look at. It's not going to be as simple sometimes as you want it to be. But at the end of the day, it's a journey, not a process. And you have to be willing to, stay along for the ride, for the journey. Otherwise, you're just going to give up and run into the same, troubles and experiences that other people have. I appreciate y'all watching. If you're a fan of this video, this channel, subscribe. For sure, you're going to enjoy the rest of the content that I drop. And I also do have a free newsletter that I put out, giving out really free, valuable finance content, as well as free trade ideas. You can get those emails directly to your inbox. I don't spam you guys every single day with 5 to 10 different trade ideas. Rather, I try to choose quality over quantity. You can go and check out the newsletter website and take a look at some of the old newsletter trade ideas. A lot of them are worked out very well. And again, it's because I'm looking at quality over quantity and really looking at high quality setups and trying to provide those to you guys completely for free.